Ahoy there, trader, and welcome back. As we conclude rule number two's walkthrough, we're going to start looking at some trade examples. So what we're looking for is to apply rule number two, to read the last pullback or the next pullback. So let's go and take a look at what that looks like. Right, so what we're going to do is we're actually going to go through the process of rule number one first, which is to find something to scan. Now, as I'm doing this, I'm recording this over the weekend, so this is pretty much going to be what I'm looking to trade at the start of business on Monday as I record this. So the first thing I'm going to do is I'm just going to click and sort and the potential stocks. So this is the percentage B indicator, which is in the watch list, and this gives me a short list of about 24 stocks to look at, and then I'm going to look for the spikes. Now, because I'm at the low end of the Bollinger Band, I'm thinking that price has retraced, and what I'm looking for is in the context of an uptrend. So because of that, I'm looking for a bull spike, and we've got two potential candidates. So let's go and take a look at what those things are. So what I'm expecting to see is a retracement in an uptrend. Now, because I'm using the Bollinger Bands, this is what we might class as a deep retracement. Just by the very nature of price being at the lower end of the Bollinger Bands, we should be looking at a reasonably deep retracement. So what I'm expecting to see is a retracement. Now that I'm looking at the chart, what I can do is visual inspection. I'm looking at an uptrend. It's very clear that we've just applied rule number one. Scan, find something to trade. Price is in an uptrend. Perfect, great. Now that I know I'm in an uptrend, and because we've got this sign of exhaustion, this spike, I'm probably going to trade it today, in this case Monday. But I'm looking at a retracement in the context of an uptrend. So I'm buying the dip in an uptrend. Now, as you've just outlined, I can do one of two things. I can trade the next pullback, the entry above the pullback high, or I can trade any of the last pullbacks. We've got a rally retracement there, we've got a rally retracement there. We can continue to look back and find any of these last pullbacks. So we've got a nice last pullback here, and this just confirms that we're at support. And if we continue to look left across the charts, this big move here, that is technically a last pullback. So we're not a million miles away from multiple points of support, which is great. These are all the last pullback territories. So we've got the choice, last pullback or the next pullback. The next pullback would be above the recent highs here. And if I choose to, I can trade the last pullback, which is just there. And again, using the trigger point of if we just use this as the example, using the trigger point of the previous pullback and pullback low as my trigger and stop loss. We'll come on to that in rule number three, the specifics of those. But that's essentially it. It's find something to trade. Now that we're looking at, determine the direction, and my entry will be above the next pullback high. Now, I've got a sign of exhaustion, a spike. So what I can do, and again, we'll look at this as a part of rule number three, but I do have the choice to refine my entry because we've got a deep retracement. I only do this when I've got a deep retracement. I don't do it on a small retracement or a small pullback. But if I'm using the Bollinger Band to scan, then yes, I can refine my entry and use that sign of exhaustion, that spike. And essentially it's an intraday turnaround. Again, in the context of an uptrend, I'm buying the dip in an uptrend after seeing a sign of exhaustion. So that retracement move is probably over for the moment. And there's plenty of examples in history if you care to look. So that's one example. So USB Bannecorp, this is looking great. Buy the dip in an uptrend, and I can trade the next pullback as it develops. This looks like a great candidate for trading. Let's take a look at the next choice, CMI. And you see how quick we did that? Again, it's the same scan. I've got a short list of stocks. I've got two that I'm looking at. So I'm only looking at those two stocks. Now, as I'm looking at this chart, it seems to me, let me just put, there we go. So we've got 12 to 15 months. So we've got 12 months in view there. Just to zoom in so it's easy to see on this recording. So we've got pretty much price has been in a range for most of the previous year. We've got a breakout, so technically something new is happening. So I can trade the last pullback or the next pullback. Now, in fairness, because something new is happening, I'm always going to trade the next pullback. So we've got the breakout move there. The recent high is the pullback high. So this is the recent high here, and my entry will be above the pullback high. So that is essentially it. That's the most conservative way of trading. I do have the choices we've mentioned. We'll cover this in rule number 3 to refine my entry with this sign of exhaustion. Again, we can see another illustration of that there. Price does typically push away. But what we can see is a break to a new high. Something new is happening. Rule number 1's been applied. And I can buy the breakout of a consolidation. So, as such, trade the next pullback. So there's the pullback, there's the breakout move. So trade the next pullback. Price is doing a very complicated and involved pullback over multiple days and weeks and months. But my entry will be above the next pullback high, which is there. So as price moves higher, then my trigger points will be above that pullback high. And that's it. That's what I'm waiting for to happen. Again, we can refine that. We'll look at the specifics in more detail on rule number 3 and 4. But for the moment, this is what a pullback looks like. And in this case, this is a good example of the pullback can take several days or weeks to ultimately develop. And that's fine for our purposes. Let's just do the scan the other way. Rule number 1 again. Find something to trade. So now I'm at the upper end of the Bollinger Band. So because I'm at the upper end of the Bollinger Band, rule number 1's telling me that price must have rallied to get there. So because it's rallied to get to the upper Bollinger Band, I'm looking to sell the rally in a downtrend, and I'm now looking for bearish spikes. And again, I've got 1, 2, 3 candidates to look at. Let's take a look at them right now. So NTES. Oh, here's one we can get rid of straight away. So now I'm looking at the chart. What's it doing? It's going up. But I've got a sign of exhaustion in an uptrend. So technically this would be a counter trend trade. I don't like counter trend trading. Nothing wrong with it. I just prefer not to do it. I want to go with the money flow. So because it's going up, price is not retracing in an uptrend. Again, we can see price is going up. Any of these downward movements are a retracement in an uptrend. So right now we've got a rally in an uptrend. And that means that I can move on. That's it. Be a master of moving on. So now that we're looking at this chart, I was expecting to see a rally in a downtrend or for price to be at a range high. And guess what? We're seeing very clear downtrend in the last 12 to 15 months. That is what price is doing. Price is moving lower. So therefore, any rally is an opportunity to sell the rally in a downtrend. And that's what we've got here. We've got this sign of exhaustion, a rally in a downtrend. Now, because, again, using the Bollinger Bands, I've got a deeper retracement. Typically, the entry will be below the pullback low in this case. And we'll look at this on rule number 4. But I've got the choice now to refine my entry. Because I'm using the Bollinger Bands, I can classify this as a deep retracement or a big retracement, and I get the choice to refine my entry. And even if we just see a retest the recent low, I mean, that's a good what do we got? $5, $7, $8, $9 move. That's a good $10, $8, $9, $10 move there on a $40 stock, just for it to retest the low. Again, that's what happened over here. Price retested the low. That's what happened over here. Price retested the lows. So that's what we're looking at. That's the type of trading opportunity that we're always looking for. So sell the rally in a downtrend. And again, because we've got the Bollinger Band as the scan, I've got the choice for a deep retracement. Now, if I was looking at a small retracement, which we will look at in a bit more detail later on, with a variation of this scan, we can certainly, deal with that as we come on to rule number 3 and rule number 4. But again, using the Bollinger Band, it finds me a deep scan, a deep retracement, and I get to sell the rally in a downtrend. Again, this looks like a great opportunity. So I've found one on the bullish side on a buy the dip setup, and I've got one sell the rally in a downtrend. Last stock that I'm going to look at is WB. Again, we've got a nice sell the rally in a downtrend opportunity. Price is going down. Any rally in a downtrend is an opportunity to sell the rally in a downtrend. Again, retest of the recent low. Typically, the sell the pullback low is what I would ultimately be looking to do. Again, we'll go into more detail on rule number 3 and 4. Because I've got a deep retracement or a big retracement using the Bollinger Bands to help me find that, I can refine my entry using this sign of exhaustion to say, you know what, that rally, that retracement move is over, and, you know, maybe I can get on board, you know, somewhere around there. Again, we cover this in rule number 3 and 4. But ultimately, that's what we're looking for. And again, we've got another nice opportunity. So I've now got 3 stocks, very quickly, very easy to find trading opportunities on a regular, daily, consistent basis. So ultimately, find something to trade, determine the trend, and find the pullback. So let's take a look at small pullbacks so that you can see the contrast and the difference. Right, so as we look at this particular chart, finding this with a variation of the same scan, and just for speed illustration, I've got a shortlist that I'm watching here, but instead of using the Bollinger Band scan, let's just exclude that for the moment, just looking at stocks with spikes. It does require you to look at a few more charts, and what it will allow me to do is to find small pullbacks as well as big pullbacks, because the big pullback, the deep pullback, or the deep retracement is defined by price being at the Bollinger Band low or at the Bollinger Band high. And because we've got a couple of steps in that scan, then if price is not at Bollinger Band high or low, then we're not going to have every trading opportunity. But what we can see is that this stock, it does have a spike on it. Now that we've got that, looking at this particular chart, I've got price in the last 12 to 15 months. Most of it has been range bound. Great. So now that I know price is range bound, where is price right now in the context of the range? Well, it's above the range. Okay, so we've got a breakout. So rule number 1 has been applied. Scan, find something to trade, and determine the trend. Okay, now that I've recognized what phase of movement is going on, I can trade a bullish breakout. In that price is moving above the consolidation, I can trade, guess what, the next pullback. So right now, is price pulling out? Well, over the last 2 to 3 days, there's a brand new pullback has developed. It's just gone above this high. We can see price moving higher, and it has pulled back as of yesterday. So this is the first bar that is not making a new bar high. So price is pushed higher and is pulling back. In the context of a range breakout, price has, and if anything, we've got a little smaller consolidation here, but that's beside the point. In the last 12 months, the money flow has been range bound. It's broken out. We've got a slightly smaller consolidation, so we've got a breakout of a breakout. But nevertheless, we've got rule number 2 can be applied. Trade the next pullback. So because it's not a deep pullback, it's just a small pullback, my entry will be above the pullback high. That's it. And we'll look at how to do that in rules number 3 and 4 later on. The other examples that we've got, let's take a look at some favorites. So we can find these opportunities on a regular, daily, consistent basis. And when you're scanning for them regularly, we can zoom in onto these. Again, another spike consideration here. Just because we've got a bull or a bear spike, it doesn't necessarily mean I'm going to be bullish or bearish. It's just helping me find opportunities that possibly I can trade today or at the next trading day. So without expecting a deep retracement using the Bollinger Band, I've just excluded that from the scan so you can see how we zero in on small pullbacks. So scan and determine trend, rule number 1. Find something to trade, spike on the candle. Now I'm looking at the chart, it is going up in the last 12 months. Great, buy the dip in an uptrend. Any retracement is a dip in an uptrend. So great, entry above the next pullback. Now it's already developing, but the next pullback is above this recent high. This is actually on my watch list of things to trade. I like, this is Disney, I like Disney. I think it's a good long-term trading prospect, but any retracement is an opportunity to buy the dip in an uptrend. And what I mentioned earlier in some of the early modules is that if you notice something that you recognize, like I'm a pattern trader at heart, what I can do is I can add a little bit of salt to my meal just to enhance the flavor. So I've got a rule. I'm going to trade this anyway. But what I can see here is that we've got a nice rally, very strong rally here, and a very slow, laborious up a day, down a day retracements. In the textbooks, this might be defined as a bull flag, and this is a nice pattern, and it just enhances the flavor of the meal. I'm going to trade it anyway, but it just means that, I recognize something that's going on here. So it's okay to sprinkle your extra knowledge and experience, because maybe you've been at this for, 5, 10, 15, 20 years as well, but you've just not managed to piece all the puzzle, put all the puzzle pieces together. It's fine. I've got a production line process. I'm going to trade this anyway. But you know what? Maybe I'm a little bit more excited about this. Maybe I've got see a greater opportunity because I've layered onto this a pattern that I recognize. And this could be a bull flag. So this might mean that there's a greater opportunity. As such, I've got other choices that I can do with money management. If I've got greater confidence with this because I've got experience with this pattern and it's enhancing my production line trading, then maybe I can increase my position size. Maybe I'd like to be a little bit more active and make sure that I'm actually assuming that the conditions are met. Maybe I'm going to look to try and compound into this should it actually move favorably and this pattern play out, because I've got a measurable and recognizable target. I've got a measurable and recognizable target based on the pattern. So I can take the height of that pattern, and that is going to be my target. So about 130 all the way up to 155. So I've got a $25 target as a possibility on this, and that gives me plenty of jiggle room to potentially compound in on the lower time frames and get paid weekly multiple times should it actually unfold the way that I anticipate it to unfold. And that's just something that is that just jumps out at me, more of a sidebar to this, but what I'm trying to highlight here more than anything is I recognize an extra pattern. I'm not going to just trade that pattern on its own. It's in addition to the production line trading process, because I've got something extra. It gives me a little bit of confidence. Maybe I'm going to be pay a little bit closer attention to this, and I'm, if it's moving favorably, maybe I look to compound into this quite aggressively. That's just what I'm thinking with this. But ultimately, rule number 1 is applied. Perfect. That helped us find the chart. Rule number 2, trade the next pullback. It's right there. That's what we're looking for. Let's go to next one. So again, found this one because it had a spike. We've got a small body, big wick on the candle. Again, it doesn't matter whether it's bullish or bearish. The point is, as I'm not using the Bollinger Band as a part of the scan, I'm just looking for stocks that have some spike that might lead me to want to trade this. Now, as I'm looking at this chart, we can see that price is in a range. Fabulous. So because price is in a range, maybe there's a reversal pullback opportunity. So as we've said previously, sometimes it's easier to put the line chart on and see where that reversal pullback is. So we've got the high here. We've got you've got a very small high, higher low, lower high, and then there's a very small V there. There's a very small pullback. It is a reversal pullback. It has developed. Let's just go down here so you can see the illustration. You've got the high, high, low, and then you've got that V-shaped pattern there. So again, it's those V-shaped patterns as price moves off the range lows is what we're looking for. And again, you've got another example there. So that's what we've got here. We've got this V-shaped pattern as price moves away from price in a range. So this actually looks good for a bearish trade. It's in a range. It's at the upper end of the range, and I've got a reversal pullback that is looking great. So again, Monday I found another bearish trading opportunity to potentially profit from. Targets, again, we'll come on to this in rule number 3 and 4, but as nothing new is happening, the same thing's probably going to continue, and we'll probably see price move lower, aiming towards the lower end of the range. Again, we cover that in more detail in rules 3 and 4, but just trying to give you the thought process. Up to this point, we've got rule number 1, find a chart to actually look at, and then rule number 2 is trade the next pullback.